Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look. Going to take a look at the dollar versus Canada. So let's get started. What we're seeing in trading today and this week is the dollar versus Canada moving to a new high. That new high is for the year, but it goes all the way back to April of 2020. At that time in April, we did have a swing high price come in at 143.48. You can see the current price is trading at 143.04. We moved above these highs right here, which occurred in the month of April as well. That area comes between 142.64. So we're between 142.64, 143.48. Currently trading at 143.03. Just to put things in perspective, since this low right here, which came in on September 22nd, not too long ago, the price moved up from 134.23 up to the high price in trading here today, which reached 143.007 so far. So that's nearly 900 pips to the upside in a fairly short amount of time. So the trend is certainly a friend, and certainly there is a lot of issues within Canada, including political issues. Will we have a change in leadership? And also the growth issues that has caused the Bank of Canada to cut interest rates. Now, in order for this price to move to the downside, the short-term bias has to show that the sellers are winning, okay? And so what would make the sellers win? Well, yesterday, it looked like we might have a condition for that to happen. More specifically, I'll talk about this level right here, this dash line, or this solid line right here. That came after the price highs through here stalled against the topside trend line right here and started its rotation back to the downside. We moved back below this ceiling here, which would have had two separate highs going back to trading on last Friday. So there was the potential that this price could have moved down further, down toward maybe this area right here, maybe down toward the rising 100-hour moving average, this trend line on the downside. But it was not meant to be. The price started to move back to the upside, and toward the close yesterday, we did move back above the 142.44. Admittedly, we did move lower in the Asian session, keeping the sellers in play. But when the price moved back above the 142.44, we see the momentum increasing to the upside, and that momentum took the price ultimately above this trend line where it backed off. But what was also key is that the low price that we saw in the North American session stalled right near the high price that we saw in yesterday's trading near the 142.70 level, keeping the buyers more in control. And we've since pushed back above this topside trend line, which currently comes in around the 142.85-ish level. So going forward, we're going to need to get below that level. That's just the start. And if we get below that level, another starting point would be to get below the high price that we saw in yesterday's trade at 142.70. Without doing that, are the sellers winning? The answer is no. You might also argue that the price needs to get below the high price, this double top right through here, in order to increase the bullish bias. I will argue that. And perhaps even this upward sloping trend line to give the sellers even more confidence and give the buyers some cause for pause. Without that, the trend, your friend, the dollar Canada buyers are in firm control. So that's my look at this currency pair from a technical perspective. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.